Today, the news is full of government ineptness. Next on Real Estate Daily. Yes, you heard that. And I know it's not going to shock anybody out there to know that the federal government and this administration is just a complete mess. So we're going to go over two different articles that show that even the agencies that govern the real estate market they're torn apart and they can't even make decisions properly. Those articles and other articles, including interest rates, today in Real Estate Daily. Welcome, everyone. My name is Troy, and every day, Monday through Friday, we go over the latest news in real estate, housing, and the mortgage markets. Now, before you jump into it, if you're out there and you're looking for a house or you're looking to sell a house, I've got something for you today and today only, every third Friday of the month. I don't even know what Friday is. We're going to give you 100% off. Yes, you're going to get a free buyer or seller's guide. Go down below, hit the link, then enter in your email address, and we're going to send you hot off the press the best way to buy a home, or the actual procedures of how to buy and sell the homes, and in the most effective way, and hopefully stress-free. Hopefully stress-free for you. Now, also, if you're getting that hot guide there, please hit that subscribe button. We want to grow the channel. We want everyone to hear about this because we are going to be that channel you go to if you're looking at daily news. Let's jump right into it. Wow, New York Post came out with this. Fannie and Freddie are just kind of sliding this under. How the U.S. is subsidizing high-risk home buyers at the cost of those with good credit. Are you kidding me? Didn't somebody learn about 12 years ago in the last recession, which was all based on the housing market, that we cannot have risky loans out there? The riskier the loan, the easier it is for someone to default. And now all of a sudden, let's go ahead and have high-risk clients. They're going to actually lower the fees on high-risk clients, and they're going to raise it on those who have good credit. So we're hearing a huge backlash out there. You're seeing a lot of mad buyers. I say the best way to get rid of these is to get them out of office, and that is the number one way. When you have a bunch of children running things that don't know what to do, have zero experience, and then they get a hold of high jobs. Oh, this is a good idea. Didn't think it through. Think they're better than everybody else. Screw them. Guys, you need to be writing your House of Representatives or your congressmen here in California. They're a bunch of douchebags for the most part. But and those are the ones that actually kind of oversee these committees and these people, the FHFA, the Freddie and Fannie, Freddie my Fannie, or Fannie my Freddie. Those are the ones that are overseeing it. It is ridiculous to say that if I have good credit and I have money and put down, I'm going to get a higher fee. But if I have a riskier loan sitting out there, I'm going to lower their fees. Guys, this is stupidity. This is how 2008, 2009 housing market came and just destroyed the entire market. We had a recession, and it's caused major problems ever since because the Fed, those losers over at the Fed, have ever since lowered rates and then continue to keep rates lower, and now they're punishing you and your jobs right now by raising rates. Let's go on to the next stupid article here. This is from the Housing Wire. Mortgage industry takes another stand against the FHFA's DTI fee. So, in one article here, Fannie and Freddie says, if you're a risky loan, we're absolutely going to cut your fees. And then the FHFA says, if you're a riskier loan, we're going to raise your fees. Let me repeat that again. Fannie and Freddie says we're going to lower higher risks, and FHFA says we're going to raise it. So let's go understand this. Let's read what this says. The upfront pricing fee on DTI ratios of 40% or more, part of a larger series of changes on the enterprise pricing grids, was slated to go into effect May 1st. So that meant that if you were at that breaking point, 40% DTI, debt to income ratio, that means if your income comes in at $100 and you have every month, including your mortgage payment, was going to be more than $40 a month, anything over $40 a month, they were going to penalize you and charge you a fee because you're riskier. Okay, that doesn't really make sense in the respect that I guess it's a riskier loan. But how is Fannie and Freddie, who's overseen, the GSEs are overseen by the government, so they can't do anything without government approval because they were annexed by the government, okay? How does one part of the government, Fannie and Freddie, who oversees them, say we're going to go and help the underhelped? I'll call it that way. And over here, we're going to punish the people who are underhelped. It makes zero sense. It's so dumb. Again, we have a bunch of people in Washington right now that were only given positions because of, not because of their experience, because of other things. And because of that, they have no experience and they continue to blunder this country. And it continues to show right here in our own backyard. I'm sorry, people who actually worked and tried to get better credit, it didn't help you. That doesn't make any sense. It makes zero sense. It just makes, what it makes you feel like is they want you to be renters and they want you to stay renters because they're putting in people's minds, especially Gen Zs, put in their minds, well, you can't afford it anyway. It's too expensive. That's bullshit because they have a plan already they're going to take effect. They're going to have fractionalized mortgages and fractionalized real estate. We're starting to see it now, and it's going to take over where you're going to be able to afford a house, but you're not going to own the entire house. You're going to have other investors own the house with you. You own the majority of it, so you can live there and do what you want with it. But when it comes to sell it, then you're fractionalizing the sale of the property. All right, and let's jump into the last thing here. The rates we saw. It looks like conforming went down about six basis points. We saw that as the only one yesterday didn't go down, so we expected it to. Jumbo just slightly went up. FHA went slightly up. So we're basically about 6.4s. I mean, if you look in here, 6.4, 6.47, 6.45, 6.42. So we're all right there in the sixes. I still think that we're a little cautious on what's happening with the Fed. The Fed has probably a couple more raises in them, then they're going to flatten out. And then a lot of people have predicted there's going to be an event. And what that event is, we don't know. I mean, it could be some type of nuclear device going off in the Ukraine. It also could be a little bit of a war sitting here and, with the Chinese over with the Taiwanese. All I know is that those are the big black swan events that the Fed then craps their pants and then drops rates to almost nothing because they think that the economy is going to just die at that point. No one's going to be able to no one else is going to want to buy or sell anything. So, well, guys, thank you very much for joining me today. I know I'm a little bit political, but I just get very passionate about poor decisions that, again, this administration continues to make, and anyone that they decide to hire is just getting slammed right now. We know Gary Gensler got slammed, a couple of days ago. We know Mayorkas, head of Homeland Security, is just getting absolutely pummeled, the amount of issues that we're having at the border. Guys, thank you very much for joining us today, and I will see you tomorrow.